Welcome back, everyone, to the Burnout Club. This is a place where we explore burnout and success one expert and experiment at a time. I'm your host, Patrice Bonfilio, and today I'm joined by Sid Jha. Sid, welcome to the podcast.
Thanks for having me here. It's good to see you again.
Yes. So, surprise for the guests. We used to work together, and it's been, I think, about 12 years since I have seen Sid. And since that time, he's become founder, chairman, and CEO of Arbol. So he created a whole entire company over the past decade or so. So I'd love to hear more about your journey, Sid, and what is Arbol?
Yeah, it has been crazy. I've been all over the place. And about 7 years ago, I left my employer at the time, Citadel, to form Arbol. And in a nutshell, the overarching mission of Arbol has been to broaden resilience to climate, financial resilience. You want to talk about access to climate adaptation. Now, what does that mean in actual terms is we have focused on building end-to-end financial infrastructure for climate risk transfer. And that's a lot of different words. What it really comes down to is you have clients like farmers, energy companies, property insurers, real estate companies, whoever, who are basically exposed to a lot of different types of climate risk. A farmer might be exposed to drought risk in his or her area. A wind farm might be exposed to too little wind. And a property insurer might be exposed to hurricanes or wildfires like the ones in LA. So you have entities that have too much climate risk. And on the other side, you have financial market players who are looking for uncorrelated risks. So rainfall in Iowa or hurricane track hitting Florida or not is not correlated to stocks, bonds, and other mainstream financial markets, right? So by structuring, creating these products, pricing them, and basically providing a full service solution, you can basically join these two different parties. And so it could be that a farmer gets paid if there's a drought in his area, and that becomes a financial contract. And where we realized what was missing was that, the climate risk crisis is this underneath crisis that's exploding. The things you see in LA or the floods in North Carolina last year, these are all just the tip of the iceberg. You have hundreds of billions of dollars in losses now per year. And the biggest problem is that insurance, which is our main vehicle to protect ourselves financially from these events, right? You insure your house, you insure your farm, whatever. It's falling behind. Over half of it is uncovered by insurance. So the thing is, how do you scale to the challenge? And so we created a lot of novel types of products that pay based on climate data instead of guy coming to your sort of business to check the damage. And so we've gone, we've tried to create basically a way to say, okay, maybe rainfall data can make a payment to you if it's too low for the month of July. That kind of looks like in finance what you would have, let's say, with corn futures or with stock indexes, right? Here, it's just changing the index to temperature or wind speed or rainfall, and you create this new type of asset class or climate and get different capital providers to support that. So that is what we're doing in a nutshell around the world.
Right. The first thing that comes to mind is when you started, was there a clean enough data set to actually model all of this out, or did you have to start creating and building these?
We had to create a lot of things. The data did exist, but it was very fragmented. Often had a lot of issues, had to be cleaned, processed. And it was basically spread out amongst, local agencies, government agencies, international agencies, private providers. And for different regions, you'll have multiple data sets that probably overlap, right? I can get rainfall data that covers, say, parts of Australia or parts of the United States, and I can have 4 other data sets that cover the same variable, and they'll all be different. because how you measure it, what your, resolution, all these things vary a lot. So there was a lot of work we had to do to even get all of this going before we could ever do the first transaction.
Yeah.
And then there's a humongous facade of like regulatory and other barriers that exist the minute you leave like selling a software or analytics product and you enter into actually doing a financial product.
Yeah.
Now you introduce a lot more regulatory burden and all these issues. But we needed to have the whole process.
Right.
To have the data all the way to the actual contracts to actually settling and doing all of the work for it. Because otherwise the market's too immature, like the incumbents
exactly.
don't exactly have much motivation. Like large insurers are like, well, this is fine how it is. I don't need to change. So you're not going to
see how that's working.
They aren't going to pay up for analytics. They're not going to just pay up for, I have a really good data set. You'll get squeezed out, right? So we have to kind of use that to build the next part of the process, to build the next part. And so we've just been kind of building and stacking over time to sort of build the whole process since then.
Yeah. If I had to pick someone to actually create a financial product with fragmented data, out of all of the people that I've worked with before, it would probably be you. You are one person, and this is like the benefit of knowing you very well and working with you at two separate firms. Sid's the type of person that would be able to spot a mistake with such precision that Bloomberg flagged him as being just a correct person. So if Sid called with an update that needed to be made to Bloomberg, they would make it like this, and then they would investigate because his accuracy level was so right.
Thank you.
So
right. That came after a tremendous number of mistakes and like just getting reamed out, in my early years. And you're like, okay, I cannot make mistakes. No mistakes allowed.
Yeah. No, and at least you're humble about it. But I think it helps when you're building a company that is relying on that data. Did the whole regulatory overlay, I guess, did it match your expectations, or was it just a really brutal era for your company and the building of it?
If I knew what I was getting into, I would have never started it. In the sense that if there's nothing else I would ever do, I'm so glad. But the scale of challenge was way greater than anticipated. So what we had to do was we had to find like little crevices and it's grow in those and then start the next one. You essentially make enough revenue. Okay, now we have enough money to then go to the next stage. So we actually started by doing derivatives, like clients like large commercial farmers and processors and things like that. So, guys who are exposed to agricultural loss and are large enough and sophisticated enough to transact in a derivative. There's like specific rules about who you can transact derivatives to. But we were under certain de minimis exemptions, which require you to do more onerous things like a swap dealer and more complex stuff like that.
Okay.
Why did we choose that? Because that is regulated by one entity, CFTC, on a federal level.
Yeah.
We didn't even touch insurance for the first 2 years because that is a 50 regulator business. Every state has different rules around insurance. On top of that, there are different kinds of insurance, and some you have to actually file with the state government, and you could be waiting months, if not years, for a new product. So there's an exemption route. Yeah. So, there's something called surplus lines, which has exemptions, but it has very strict rules around advertising or the types of customers you can sell to. Each state has different rules. So just being in compliance with all these things is its own, architecture. But it is also a big moat once you get it all set up and you understand it. There's insurance, and then that gets reinsured. So that requires entities in Bermuda, where's the center of reinsurance. So each step has come with like, okay, now we'll need to do next. Okay, fine, let's do that. And we have to be very, very careful, and we're extremely careful on being regulatorily compliant. But that means each country we operate in, each jurisdiction we operate, we have to make sure that what we are selling is compliant, not just with regulations, but the spirit of it is understood by the client buying it.
Say more about that. What does that mean?
So if I sell you a contract on rainfall, or if I sell you a contract on low wind speed and you're a wind farm, it's essential that we make you understand when will it pay out, when will it not pay out, what data is it referencing, it's, and all the other stipulations. And that's a key part of selling any financial product.
Right.
It's very short term to try to sell it 1 year and then client will never buy it again if it behaves in a way that doesn't make sense. Now, we have taken a lot of effort to always show, okay, over the last 34 years, this is what it would have paid out. Unlike a regular insurance policy, I can actually show you what it would have paid out over the past, say, 3 decades or 4 decades. That's as far back as the data goes, right? I can rewind the clock. So you can understand, okay, this did pay out in a big drought year like 2012 or this or that. It has to match experience. Otherwise, it just becomes this abstract data product that nobody has any idea what it actually means.
Yeah. When I think about this type of product or even just the word climate risk, for me, it just seems like it's been so politicized. So how do you navigate that and sell this product without getting involved in all of the politics?
Yeah, great question. So climate change is politicized, especially the causes of it. Climate risk is actually far less politicized because you can choose to publish data on it or not. You can bury your head in the sand. Doesn't matter. The costs are hitting the consumer and businesses nonstop. They're actual dollars. You have parts of Florida and the Gulf where your insurance payment now exceeds your mortgage payment. You have local property markets that are falling apart because people are pulling out of deals because they agree to a property sale and then they find out, wait, the insurance might cost me, tens of thousands of dollars per year. What happened in LA. And in crops, I can just name example after example. So what we're hyper focused on the solution. How do we get the regulatory, the technological, the AI that helps price all this stuff along with the capital providers to actually furnish products that take risk off your mind. And that doesn't have any political, tilt to it. And you've never seen any change up or down based on politics over the last 7-8 years. So it's really about if you can make something that helps reduce risk, then that's something people are interested in regardless of their political affiliations. And we operate, extensively in what you would call red states or blue states, and none of that matters because at the end of the day, it's just wildfire's going to hit regardless of, whatever the politics is.
Yeah. This is a great point. Follow the money, right? If someone or some company is being impacted in a material way and there's a serious shift that has to be addressed, then that's how you overcome it. It seems like you've done that really very well.
We're trying. It's exactly. It's just at the end of the day, there's no shortage of industries being impacted. It's more a question of which ones are ready to embrace, new forms of risk management for it.
What industry was the first to embrace it or seem the most welcoming?
Agriculture is where we started. Always, farmers have a very strong intuitive sense for the climate risk that affects them. And what we found actually was an even bigger market in the processors and transporters. So if you look at the ag supply chain, the growers often have a federal crop insurance subsidy. So we would sell supplementary products like things that are not well covered. But if you take a processor like a cotton gin, these guys take cotton and make yarn.
Yeah.
They need the local crop. So we sell insurance on local production of cotton based on US data and things like that. These guys don't get a subsidy check if the cotton crop fails.
Right.
They're just in the middle of the supply chain. So we even have a case study on we always like to share is like cotton gin, whose business was saved because of our payment.
Oh,
Because
nice.
when there's no cotton payment, cotton crop, I mean, you still have fixed costs to running these things. You still have employees. It can be devastating. And you saw that in the 2012 drought. I think we were, when we were working together, most of the ethanol industry in the US went under.
Yeah.
Well, they don't grow corn, but if there's no corn to grind, they have, they get in a giant hole. So that whole agricultural ecosystem was very embracing because they understand the necessity of just how much weather risk affects them. And the other is the energy industry, which we also started doing afterwards. Like temperature spikes are a big problem, and as renewables have become a bigger part of grids, if you have a sudden drop in wind or sunshine, it causes major ripple effects in the grid. And we saw what can happen, like with Spain recently, where there was a total grid collapse. But there's a lot of near misses that happen often lately.
What would you say is the vision for where you want to see the company going in the future? Are you there? But it seems like you're tacking on business lines. So what does the future look like for you?
I think where we are heading to is this notion of creating an entire ecosystem, like a true climate risk platform that allows everybody from a small farmer to giant banks like JP Morgan deal with their climate risk. And it's affecting all these different variety of, clients. When you think about your banks, they are all starting to feel the stress of climate risk that's embedded in their loans and mortgages and farm loans. So, and central banks are pointing this out. So covering that entire gamut. And on the other side, building a real asset class and a very, very broad set of risks that truly need new capital to come in and new types of clients to come in to hedge those risks. So that's where we're heading to, is like a full platform that touches on, almost every part of the economy that is affected by climate.
I mean, it's so interesting to put yourself in someone else's shoes because, this podcast is all about burnout. And one of the reasons why I thought it was so important to have you on is because for a lot of individuals and businesses, climate risk is a huge reason why people have burnout, because it can affect them so deeply and it can just wreck your entire business. So are you seeing your products help mitigate burnout? And I don't know if you actually see far enough into it, but you just referenced a business that was saved for it. So does it seem like it's having that ripple effect as well, the positive, not just a financial component?
There's a lot of small to mid-sized businesses we work with. And then we also run a property insurance company covering coastal areas from Florida to Hawaii. And again, we're going in every area where the incumbents are running away. To me, I think providing coverage in underserved areas or areas where others are leaving is going to be a big part of providing that comfort. I think it's pretty scary to, be in a hurricane zone and then have your insurance company just like pull up. That has to be extremely stressful. Or you're in a wildfire area and, they just say, oh, we'll cover you, but we'll exclude wildfires. Yeah. That's not covering the main thing that you need covered. And also then you're left really high and dry when these events happen. So, and it's not, there's like a layer of extremely well-off property owners who could self-insure, but that's beyond the scope of most of us, right? So, and your home is generally where a large portion of your assets are, like your net worth is tied up in your home. So it's extremely crucial that we find solutions, and not just us, like in general, they find solutions, because without insurance, you then don't have a mortgage market. Like these are all extremely intertwined concepts: lending, insurance, and real estate, right? So we'll have to have both private sector and government solutions, national solutions to deal with this.
Mm-hmm. So if you had to, I guess, create some sort of call to action for that, what would you want to see? Or, if there's someone that is in this space enough to be helpful, right, for the larger scale action, what would you want them to do?
There's no easy solutions to this. I think there needs to be a more comprehensive set of incentives to, for example, build more robust structures, right? You're building your flood zones or wildfire hurricane zones, getting actually the right incentives to construct more robust structures. Currently, it's really up to the builder, right? It's not different taxation structures, different incentives, even reduction of premiums, which can be funded partly by governments. I think you need a multi-year market insurance. So your mortgage is 30-year, 15-year mortgage, but insurance is year to year.
Yeah.
And the long-term U.S. mortgage market really got going because of Freddie Mac, and all these kinds of semi-government vehicles that assured investors that you could have a longer-term market. You may need something similar with insurance, which is still a very annual business. And what that does is if you invest a lot, like it's not just residential property, if you have a big investment in commercial property, you're exposing yourself to, well, next year, am I going to get coverage, or what's that coverage going to look like? Or is it going to be 30% more expensive? Who knows?
Yeah.
So, some degree of at least a multi-year market that may need some support from the government. And I think there's a lot of solutions around things like, disaster insurance that pays out quickly and transparently based on like data, like the parametric stuff, right?
Yeah.
If you look at FEMA, and there's a lot of challenges to getting payments in the hands of people after an event. By having it tagged with data, okay, Cat 1 hurricane goes through this area, here's, $1,000. Cat 2 goes, here's $5,000, and so on. By having simple, transparent policies that get money in the hands of people right after an event, we have all the data for it. That can actually change a lot of frustrations that occur when you have a flood or a hurricane or a drought. And it doesn't mean it replaces traditional insurance or traditional disaster aid. But this would be a layer on top to get people paid quickly, transparently, and fairly as soon as an event happens.
Yeah. I mean, that makes complete sense. I don't think there's anyone that would say, no, that would make it worse, right? Like, after a disaster.
You never know.
That's very true. Yeah, we'll see it in the comments, right? This is all real. Why doesn't it exist more, right? The parametric insurance that you're talking about. Is it just because the larger insurance companies didn't need to? Or is it with the data? Why doesn't it exist more often?
A number of things. Data has been getting better and better. It probably wasn't good enough, a decade ago, let's say. There is a general lack of motivation on the part of insurers, for sure. You're in a regulated business. It's kind of, all right. It's not like you have a huge push to invent new products. What you're doing seems to be working mostly okay. So generally where we have found growth is in areas where the regular insurers are either scaling back or pulling out completely. So, it's an industry that's very tough to launch, truly innovative products and a lot of barriers to entry. Yeah. And then it's very different from the business model of insurance. Right? Parametric means event happens, here's a payout. That's almost opposite of how insurance works, where a bunch of the returns are actually embedded in the delays of payments, right? Like it's not like you're earning float. You're earning returns on those premiums while you're negotiating payouts, and some of them can take actually years to fully get paid out. Parametric turns that on its head. It's not exactly the business model that these guys signed up for. You
Yeah.
need new types of capital. You need Wall Street capital. You need
Mhm.
capital that actually understands more the world more from a futures and options standpoint. Because it's kind of
Mhm.
more similar to that.
Yeah.
But that takes time. There's a lot of education involved, new types of risk that these guys are not necessarily as familiar with, on day one.
Yeah, I see what you're saying. It makes sense now. This seems like it makes total sense to me. How does Arbol make its money if it's not relying on the float and the delay of payments? So, attracting investors and changing the conversation around insurance and new products. So how do you make the money?
We actually just take a fee for structuring and pricing for the most of our business. But the capital providers are making money the old-fashioned way. They're just charging X on a premium and paying out hopefully less than X over the long run.
Mm-hmm.
Much like you would in an options book, right? If you were short options, you'd earn premium and you would hope that the payouts are lower than that. You don't have float there either, really. So it's more closer to that. It's important that these products be economically viable, of course. But where they come in is they're basically being used to fill gaps like rising deductibles, exclusions, where it makes sense for the customer to pay that margin.
Right. Yeah. So let's take a step behind the curtain and understand you and your relationship with burnout. So you're kind of solving really global problems for other people and companies. I don't know if there's any sort of personal connection to the mission of Arbol, but how do you deal with burnout on a personal level?
I think the cleanest way I've ever found to not sort of feel that is not thinking of it like a choice or even a passion. Just it has to be done. Call it the old hunger is stronger than passion,
Yeah.
right?
Yeah.
Early on, it was extremely painful and discouraging when you were when you're just raising, trying to raise your first round. This thing sounds like a crazy idea to begin with because there was not a single example of success, right? It's like super abstract and bizarre. There was not a single example. Like, it's different when you're like, okay, I'm going to be like the Uber, but for like this other industry. Yeah. Here, it was like, okay, well, it's always failed for the last 20 years. It never got off pilot stage anywhere for any reason. Incumbents hate it. And a bunch of VCs who passed on us early were like, oh, we have this expert in insurance. We're going to talk to him. I'm like, he's going to say it sucks. And if you're never once did we get like, hey, you should put it into this. So it was like a constant stream of rejections and like not rejections because, oh, your revenues are this or that. It's like, this doesn't even make any sense. And so that's a lot of me too. I'm not exactly the most, whatever, greatest fundraiser here. And so that was, I think, the phase that was somehow got lucky. But that was the phase that was the most challenging and I would say at times was very discouraging and like probably prone to burnout. But I made a pact with myself and even the co-founders that it's like there is no other option here. It's Alexander's reburned the ships basically. There's just no going back. Yeah. And like that helped a lot in like once you stop thinking that there's I have this backup and I'll do this and that. I remember for some time I used to run a little trading bot on the side, like a macro thing. Because I was like, okay, in case this doesn't work, at least I have a track record I'm building on the side and I can still get a job back. And I shut all of that down. It was just no more backups. Yeah. As it started to come together, the burnout stuff really receded because I was always looking for my own thing to, whatever your own vision is, right or wrong or whatever, make it happen I was much more prone to burnout when I was working for, for others, basically. And not that there was any problem with them, but I guess I'm just like not built for to be. I'm not built to be a great employee. I managed it all right, but I ever felt like 100% of my soul was in it, not even close. At some point, it becomes like I feel like there's better uses of what I've learned and what my time was than than what I was doing. So that helped a lot too. So I would say mostly it's just there's nothing else. There's no backup here. It has to work. Makes it a lot easier.
Yeah. I love what you're saying because one, you have the alignment. Like you have to know yourself and be really honest. If you are the type of person that will always have that kind of like deep thought and feeling, I need to have my own idea and see it flourish, that doesn't go away. And I think some people on the opposite side kind of lie to themselves and think, oh yeah, they like how flashy it seems to be an entrepreneur. But like, if it's not deep down inside you, then don't do it.
Yeah, I am definitely not doing like a flashy anything. This is flooring all insurance. I definitely was never like, oh, I have to be an entrepreneur. It was like, I just can't work for anyone anymore. And, everyone asked me like, what, was it the idea? It's like the idea came second. First, it was like, I just can't work at a bank or a hedge fund anymore. It's like, for me, it had just run its course.
Yeah.
I was kind of bored. I didn't know, like, you start questioning, like, what am I even doing every day? I was like, I got to get out of this. So, and then it was like, okay, well, let's think of an idea and like, maybe this will kind of, I was very keen on using a lot of the things I'd learned over the years. Like it should bring together different things that one has its work. And so it's had enough overlap with commodities. I was quite into blockchain. We actually started as a blockchain white paper. It was all sorts of random.
Oh yeah. I forgot about that.
Yeah. And then I was, I had a side sort of very strong interest in satellites. And I was like trying to launch one of the first commercial radar satellites. So learned a lot in that process. So, all of these learnings were helpful in contributing to, okay, the idea pulls on these threads. Maybe that's the edge, right?
You know what's interesting? I've been doing something similar, just kind of an exercise to get out of my head. I have so many projects and initiatives and groups. I'm like, is there a common thread here? Like, how do all of these seemingly random things tie in? Like, what is my interest with them and what is the overlap? So I think it's interesting for all of the listeners to do really and just see, are there any threads? Not that you need to, launch a company to do it, but just to understand yourself a little bit more. I don't know if you have a separate challenge for me, but if you don't, that I think is a good challenge.
That works. That's a good challenge. It's a very worthwhile one too, because you might find some very interesting threads to pull on.
The shape was different. So I was doing all these bubbles on a page and I'm like, you know what? It's really like a flower shape. And I'm like, no, it's a grid. And then, my natural tendencies came out and now it's a massive spreadsheet. So, but I could actually, have enough columns to find the intersections now. So that's good for me. And then I love what you said about just burning the ships, right? And if you're going to do something and you're really serious about it and you've already set aside time and resources, make a pact with yourself or your co-founders or whomever and say there's no other option. Because if people documented how much time they spend worrying and creating and maintaining the backup plans and the side projects, how many more hours a week would you have to actually be successful at the thing you're trying to succeed at? It would be a huge difference.
Yeah, beyond hours, it frees your mind space out to not, that's where I think burnout happens often when you think that, okay, well, I'm so tired of doing this, but, I'll do something else or I'm going to rest. none of those are options when you start a company. You'll just have to do it like pretty much nonstop. So like, and that doesn't mean physical like exhaustion. That's what I do want to stress that. Like, I think I've had phases where I work a lot of hours or I don't. Those are not things that actually even register. Like, it doesn't matter to me if some weeks are really, really intense and, Saturday night, I'm still like typing away emails. Who cares? Like, those are just normal things you do. And I don't ever consider that as work or not work, or I don't even have, that's not a conscious thought. It's just, okay, something needs to get done. We'll do it. It's more of a, on an abstract level, if you think about it, if you have options, that's when you start to burrow into your mind that, hey, maybe that backup isn't too bad right now because this is terrible. This is going awful. And there were things in the early days that I spent like, a year or 2 years trying to get it going and got close and falls flat, right? These were like, various business lines we were trying, and we try like a whole bunch to get one to work. So you're going to have those and you're going to feel like awful. And, that's when you get burnt out. If like you think, okay, now I can just try something else. Give up and go back.
I really appreciate that you mentioned that you worked for so many months or years on certain projects that ended up ultimately failing or not catching on. How did you pivot yourself? Is it because of the pact you made that there's no other options, or was there something else helpful to pick yourself up after admitting that this is just not going to work? I need to try something else.
I think the biggest thing is that I never do anything just one track. So what I would have is at different stages of maturity, I would have about 10 to 12 different initiatives that were going on at the same time. And that was the crazy thing. It was like a lot of different regions and there was stuff I was doing in Cambodia, Colombia, United States. I was running around trying to learn about watermelons and like you wouldn't like the most random stuff, right? You wouldn't believe. And I, just chase those rabbit holes. But I had so many going on at different stages. So like, it was almost like delusional, like levels of like, well, okay, well, this failed, but I got 6 more things and a couple of them are only 25% of the way through. So I got to see those. And you just keep like telling yourself like, no, this is just one of many. You'll feel like, you'll feel terrible for a day or two, but then it's really, really important to almost be that bullheaded. I don't ascribe a lot of the reasons where I'm at today, and I have a long way to go, and I don't ascribe it to intelligence or any of these things. It's mostly that I'm almost like, it's almost impossible to discourage me. I'll just be like, well, it doesn't work. Now I got, 4 other things to do. And it's, maybe it's just completely, borderline mental illness or whatever. But it's just very, very important to have those lots of different irons in the fire, so to speak. And like that is really helpful to not get too hung up on in one thing not working. And I still do that to this day. There's even for every initiative, there'll be like multiple points of contact, multiple things being worked on. And then the things that start working, okay, let's focus on that now. But initially, you start with a lot of random threads and you slowly prune them as, okay, this didn't work, fine. And that also comes, you come back with like, okay, I gave it my best. But it's really, really dangerous to get stuck like that. This actually happens to successful. I've seen that even more. Like you'll have success with, say, a particular client or a particular line of business. And then, it's very, very tempting to be like, well, this is working. Or we had things like that where it's like, this is working great. And let me just keep riding that. And the thing is that, anytime your business is working, you should be thinking of a few other initiatives that might actually take this down and replace it with something bigger. Otherwise, the rug gets pulled under your feet all the time. Right. Like, let's say you have one giant client. Great. You're making tons. It's going great. But you don't know what's happening in that client, inside that client.
Very true. Yeah.
You don't know if there's personnel changes. They had a board meeting that changed their priorities. You just don't know. And you're at the one. So yes, you got that one client, but the next day you should be hunting for the 4 other clients in that industry to make sure you're not exposed to any one, unknown variable.
Spoken like someone that knows how to mitigate risk. It's all on theme.
Everyone knows. We're still learning.
Yeah. And it makes it all the more important to not have those side projects, right? Like, so if instead of side projects, you're just having multiple initiatives for the same agenda, then it does help just the health of the company and your mental health, right? Like, if you can do something so that you accept failure a bit easier and better, then
I was very prone to doing a lot of side projects, just bouncing around, and that credit, to give credit where credit's due, that was all my wife would be like, stop like doing so many and just focus on the one. Yeah, it's a tough leap to give up a pretty comfortable like finance career, and that's all I ever knew. Yeah, but it was important. Otherwise, you just get stuck in these half attempts.
I know we only have a short time left, but since you brought up your wife, I have to ask you. So, how has having a family now changed how you look at your business or running your business?
I would say, especially having kids, like a 6 and a 3-year-old, and having kids changes you a lot. It really just makes you, one, extremely immune to noise. You're like, all right, no amount of noise can bother me. Right? Like, but on a broader level, it's just like you get a lot more patient. I was definitely very impatient with things, and I think, watching kids grow makes you a lot more patient about and sort of calmer, because with them, you're always like seeing the, this month is something new, some new phase has come or whatever, especially in the early years. But it forces you to stick through it.
You do. Yeah, you have to.
You have to, right? So I think you have no choice. And it's like kind of interesting that you kind of get in a similar mode with the business too. Like it's just important to stick through it and be patient. Yeah. It makes you grow up a lot.
Yeah. Well,
I needed that in spades. Still not doing up, but I was I was a total kid for a long time. So, right?
Oh, it's so funny, right? For the listeners, I knew Sid long before he had kids, so it's but you were always incredibly calm. So it's interesting you say that it made you more calm and patient. But I like
it showed me what a non-calm thing looks like. Yeah. It's easy to be calm on a trading floor. It's much harder to be calm when you have kids going nuts.
That is very true.
I learned a lot about how actually calm I am versus not. Learn a lot of things.
Oh, that's great. Any last thing you want to say to the audience, whether it's potential clients or investors or just people generally interested in this subject matter? What would you like to leave them with?
I encourage everyone to come check out our website, arbol.io. And, I'd always love to hear from either investors or potential clients or whoever in the industry, even in finance. And it's always useful to bounce ideas. There's a lot of learnings from the finance industry that are applicable to climate, and vice versa. And there's a lot of industries that are realizing that this is a big problem. Either our supply chain is vulnerable or our revenues are crazy volatile and getting more volatile. And, there's a lot of solutions out there that may not be as well known. So I encourage everyone to just come and reach out and have a chat with us.
Fantastic. Well, thank you, Sid. It's been amazing catching up and talking to you, and congratulations on all the success at Arbol. I really appreciate you talking to me today.
Pleasure, and thanks for having me.
Great. All right. And to all the listeners, please subscribe and listen to the Burnout Club. We'll see you next time. Bye.